Well, it's time to do business again. Welcome to Business Incorporated. And here's what we have prepared for you on this episode. In Zimbabwe, the reserve is up. It has hit $629 million. Is it time for rate cutting? We see Kenya here. They're planning to cut rates, lending rates to 10%. A collaboration for cleaner energy. Egypt and France signed €7 billion deal for green hydrogen facility. Good afternoon, everyone. I'm Ini John Mekwa. Let's do business. We start from the global space as usual. Oil prices dropped to their lowest in more than 4 years in early trade today on looming demand concerns fueled by escalating tariff war between the United States and China. These are the two biggest economies in the world. There's also a rising supply outlook. So we see that Brent lost $2.13. That's about 3.39% to $60.69 a barrel. WTI is also down almost 4%, $57.22 a barrel. So for both benchmarks, we've seen a tumbling of over five consecutive sessions since President Trump announced those sweeping tariffs as reciprocal. And of course, we've seen a counter tariffs also follow that. The U.S. will impose 104% tariff on China from midnight today. A White House official has said this, adding 50% more to tariffs. And the latest is that China has also added about 45% more tariff on the U.S., which seems it never ends. And the world, of course, world economy suffers the consequences, and we'll see what happens in the coming days. Back here in Nigeria, well, there's been a meeting on the crude for Naira policy. The Technical Subcommittee on Crude and Refined Product Sales in Nigeria initiative, they've convened a meeting, they say it's to review progress and address ongoing implementation on the matter. The meeting was attended by the Chairman of Implementation Committee, the Honorable Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, the Chairman of the Technical Subcommittee and Executive Chairman of the Federal Inland Revenue Service, Mr. Zach Adedeji, the Chairman the Financial Officer of NNPCL, Mr. Dakoshegun, the Central Bank of Nigeria, also well represented among others. They've reaffirmed the government's continued commitment to the full implementation of the strategic initiative as directed by the Federal Executive Council. According to a message on their X handle, that's handle of the Ministry of Finance, the Crude and Refined Product Sales in Naira initiative is not a temporary or time-bound intervention, but a key policy directive designed to support sustainable local refining, bolster energy security, and reduce reliance on foreign exchange in the domestic petroleum market. As with any major policy shift, the committee acknowledges that implementation challenges may arise from time to time. However, such issues are being actively addressed through coordinated efforts among all parties. The initiative remains in effect, they say, and will continue for as long as it aligns with public interest and supports national economic objectives. So I guess we could have our hopes up now. Perhaps one of these days we would hear the revival of the crude for Naira policy. Now, in the metal space, gold prices rose today as the dollar weakened and investors braced for U.S. President Donald Trump's tariffs to take effect started today, April 9, with most flocking to safe haven gold for cover as global trade tensions escalate and fears of recession mount and get closer. So spot gold gained 0.6%. $3,000.13. That's lower than what we had this time yesterday, in spite of the fact that we see investors hedging right there. U.S. gold also up 0.8%, $3,014.40 a barrel. Spot silver dropped 0.1%, $29.80 a barrel. Platinum is down 0.4%. $917.56, and palladium also lost to 0.2%, $905.25 a barrel. So we see that the dollar lost ground as imposition of tariffs looked imminent and making greenback priced gold cheaper for overseas buyers. That's why we see more movement right there. However, some gains in non-yielding bullion are limited by U.S. benchmark 10-year note yielding and over 1 week, hitting an over 1 week high. That's for the benchmark in the United States. And markets are waiting for minutes of the U.S. Federal Reserve's latest policy meeting. That's expected later on today, and U.S. Consumer Price Index later on tomorrow, and Producer Price Index that's expected on Friday. These, of course, will give investors direction on which way to go. The Board of Directors of the ECOWAS Bank for Investment and Development has approved a combined financing package of €230 million and $10 million to stimulate socio-economic growth and regional development across West Africa. This was disclosed in a statement issued by the bank following the conclusion of its 91st Ordinary Board meeting held under the chairmanship of Dr. George Agwekom Donko, President and Chairman of the Board of Directors of the bank. Key highlights include $50 million line of credit aimed at supporting small and medium enterprises. That's in Nigeria. In the Republic of Benin, there's a €10 million facility to co-finance the construction of 5 cashew nut processing plants and a cashew balsam production unit. They also approved $180 million credit line to Motor Engine Nigeria, and that's to support Kano Maradi standard gauge railway projects in the country. Still in Nigeria, the country's official gross reserves declined by $180 million month on month to $38.3 billion as at March 31. This decline, according to the Central Bank of Nigeria, marks the third consecutive monthly drop in the external buffer, which peaked at $40.9 billion in December last year. The report comes about a week after the CBN reported that net FX reserves increased to $23.1 billion at the end of 2024, which is its biggest or highest in over 3 years, in contrast to the $4 billion level that was recorded, $40 billion level that was recorded at the end of 2023. The National Coordinator of the Livestock Productivity and Resilience Support Project, an initiative of the World Bank, Mr. Sanusi Abubakar, has been speaking on some benefits that Nigeria can harness from the livestock sector across all levels. He was speaking at an event at the Federal Capital Territory. The National Coordinator of the project explains that the $500 million initiative targets productivity, commercialization and resilience of targeted livestock production systems in Nigeria, as well as strengthening the resilience of climate change, environmental degradation, and farmer-herder conflicts.
Representatives of the Livestock Productivity and Resilience Support Project across 20 participating states are converging on this hall to discuss how the sector can contribute to the federal government's vision of harnessing its potential in the livestock sector for local consumption and export. The global livestock market, valued at an estimated $1.4 trillion in 2024, is projected to reach nearly $1.6 trillion by 2034, driven by increasing processed meat consumption and food industry expansion. Figures by the Nigeria Export Promotion Council shows that Nigeria possesses huge potential for livestock exports, estimated to generate over 150 billion naira annually. Government officials are hopeful that this can be harnessed.
Our livestock sector has the potential to not only meet domestic needs, but also to supply high-value export markets. The Middle East alone imports over $5 billion worth of halal beef every year, and with the current crisis in Sudan, a traditional supplier of beef, there is a growing supply gap that Nigeria can strategically fill.
To leverage the vast opportunities in the livestock subsector, which includes establishing processing plants for meat, for dairy, and for hides. There is need to enhance the value chain through multidimensional approach.
The 6 livestock value chains supported by the project are beef, dairy, piggery, poultry, sheep and goat, hides and skin.
The Airpress project has in the pipeline a robust livestock market information system, which will facilitate the availability of market information through various platforms to all players in livestock marketing, agribusiness. It will also provide a livestock marketing database.
A lot of people are seeing the livestock farming as elderly people's businesses, and maybe the return on it is not so well. And that is why we have the World Bank supporting this project to ensure that they have value for it and they enjoy what they are doing and also have a good advantage of it.
With more commitment and better coordination, both at the federal, state, and local government levels, the nation can benefit from the potential of the subsector.
Nigeria's ban of export to the United States following the 14% tariff imposed by President Donald Trump is being criticized by not just the U.S. trade representative, but also economist and chief consultant at B. Adedipe Associates Limited, Dr. Biodun Adedipe. Dr. Adedipe believes that Nigeria's response could have been more strategic than direct.
Our exports to the U.S. is largely hydrocarbons to start with, and that takes between 90 and 92%. And of course, on these, as you rightly said, no tariffs on hydrocarbons to start with. So we are looking at a window of about 8, maximum 10% of what we export to the U.S. being non-oil in nature. But that is not the end of the story. We should also look at the value involved and then ask ourselves, if there's an increase in tariff, some reports say it's 14% that the U.S. government slammed on Nigeria. Of course, some say it's the minimum 10% that applies to all countries around the world. Now, whichever way it is, in my own view, our response should be more strategic, not direct in that manner. Instead of putting a restriction on the export of those items, which are simply to start with, ignore that, but now think about what to do. Should we begin to interrogate the direction of our trade in terms of redirecting the trade, not necessarily coming out frontally the way we have done? Should we also consider several other opportunities within the African, region, where we talk about the Continental Free Trade Agreement? Can we begin to look at African countries, and now we can increase our footprint of export of our non-oil products to other African countries? So this, to me, should be the direction. Let's strengthen Nigeria's competitiveness internationally, rather than, reacting directly to what the U.S. has done this instance.
Also, Dr. Adedipe was a guest on Business Morning earlier today. Also on Business Morning, we had a conversation with the Senate chairman of the Committee on Capital Market, defending the new law on investments and securities, and also propelling ways which the capital market can be more active and more listing put on the stock exchange.
In the Senate Committee on Capital Market, we are aggressively going into stakeholders' engagement to explain to Nigerians the benefit of getting involved in the capital market. Because the days of people not having confidence is gone. Today, even the issue of unclaimed dividend can be tracked, and people can easily get their money back. So I believe that Nigeria has come off the stage where people should have more confidence in the capital market. And we're building it. But it is a collective responsibility of those already in the capital market to even explain to other companies who are not in the capital market that these are the gains you are supposed to have if you are in the capital market. I know the reason why some of these companies don't want to be listed, because they will think that once you are listed, then you have opened up your company for scrutiny. But there are other advantages of getting listed. If you're listed, you can attract more foreign portfolio, more foreign investment to your company. So I don't think there is need for companies not to have confidence in Nigerian Stock Exchange and get listed. So we are talking to them. In the next quarter, the Senate Committee on Capital Market will also be engaging listed companies in Nigeria in a round table to explain to other business entities the advantages of getting listed, and also to tell us if there are areas they think government should play a role. We as government, we as lawmakers are doing our best to ensure the capital market is given a lift, an uplift in Nigeria ecosystem. That is the way it is as of today. You will realize that NGX, otherwise known as Nigerian Stock Exchange in the past, today you have one of their subsidiary, CSCS, that is responsible for ensuring that this trade goes on in and out within a period of 3 days. The last time we engaged them, we told them that there is need for them to reduce it to 24 hours, so that once you trade, you can sell, you can buy and sell, and get your money within 24 hours. And they assured us that they are going to improve on their system.
I was talking about the NGX. Will Ibong is still there since morning and now has intraday numbers to share with us. Hi, Will. How's trading going on there?
Hi, Ini. Trading is going well. Well, for the shareholders of the NGX, because we're having that AGM ongoing. But for the market in general, I'd say that there's a bit of volatility. But you say it's a zero-sum game in the market. You win some, you lose some. So there's some people smiling right now, Ini. And you said I've been here since morning. So yes, I've been soaking up all the numbers. I'm probably literally just busting with numbers right now. So let's just kick off with market numbers. You know, we see NGX. We saw it open today at down about 0.13%, but we've seen a bit of recovery. Midday, we saw it fluctuating at about 0.05%. It got about to 0.12% in the positive territory. But right now, we are teetering in a flat line near 0.03%. We're hoping that the close of business, maybe we would be in the green and not in the red. And we saw stocks that were driving it, some of them in the oil and gas sector, some of the banking stocks probably still bouncing off yesterday's positive performance. Now look at the JSE in South Africa. We see it down 1.87%. See EGX 30 at intraday also down 0.38%. But Kenya stock market closed Tuesday's session also in the red, down 1.74%. But before we move on to the Middle East and see other markets out there, let's dive into what's happening here at the NGX, which obviously we have Philip Andegbe is Vice President and Head of Investment Research at Cardinal Stone Securities. Good afternoon. It's good to have you on the program.
Yeah, good afternoon.
Yes. You heard we talk about the numbers this morning. A lot of volatility going on. It's still, I want to know, is this a reaction to, Trump's tariffs taking effect today? Are the markets reacting to this, or is this just a normal market at play here?
Well, I think it's broad reactions to the risk that has been intensified by these tariffs. Remember that the tariffs and implications on trade have more or less negative pass-through to demand outlook for commodities like oil, right? And that speaks to potential challenges to variables like fiscal deficits for Nigeria. So when there are concerns like this, you expect that there will be some sell-offs, and that's what we've seen, right? A lot of sell-offs across the space. I think it started in global markets. You're even seeing even more intensified sell-offs, right? But Nigeria, I think, we're a bit insulated from the fact that foreigners are not the predominant drivers of our market. I think as at February, they constituted about 8% of the total market in terms of transactions activities.
Okay, so if we want to talk about the stocks that drove the market this at intraday, we've seen O&O and some other stocks that investors are picking at, cherry picking. We see bargain hunting at play here. But what about O&O? What is it about O&O that's making investors bleed it so much and probably coming back to pick it up?
I would say potentially bargain hunting. I think that's the best explanation because it was sold down significantly to just over 30 Naira. And I think investors may have remembered that they are also the subject of the recent acquisition that they did. So a lot will depend on how well they're able to sweat those assets going forward. And that may be a critical driver, going forward. So maybe some investors are positioning in anticipation of better numbers in the future.
Okay.
Assets are sweated.
And talking about numbers, we mentioned earlier there's that ongoing NGX Group annual general meeting. That's the 64th annual general meeting ongoing here at the NGX, right at the 20th floor there. But we saw that fantastic number coming out of the 2024 earnings report, and we saw 104% growth in revenue. Talk to us about that.
I guess there will be a lot of very happy shareholders in there at the moment because the numbers were indeed really good. I think they were able to achieve that by pushing strongly very good revenue growth and cost efficiency. Speaking to revenue growth, I think the focus on more or less boosting the growth or the increases in key line items like listing fees, which of course was helped by a lot of market activities during the year. And of course, I think transaction fees also rose very strongly, and that speaks to improved volume of trade. And the good thing about the volume of trade is that a lot of it was actually driven by domestic players, which is good because if the market is mostly driven by domestic players, you are a bit more insulated, from global shocks. But in addition to that, I think they also did very well in terms of cost efficiency, with costs just rising by about 30%. When we look at expenses or costs, what we typically do is try to compare the growth in those expense lines to revenue growth and, of course, to inflation. On both fronts, they performed very well because revenue grew very strongly, I think in excess of 100%, while expenses grew just about 30%, which is also below inflation rate. So that's some kudos to the management because in this environment, it's quite tough. And also given that I think the bulk of their cost is operating expense, and then the second largest component of their cost is personnel cost. So I think really decent numbers.
And you're looking at their EPS for 2024 is at 4.50 Naira, a huge leap from 2.43 Naira recorded in 2023. What do you think they did differently this time around to give us this turnaround that we're seeing?
I think it's just deliberate cost efficiency. And I think there was another line item I think it was also important is net FX income, which was about 16 to 16.5% of revenue. And that is really very key. And why it's key is because we operate in an environment that is a bit more volatile. We're talking about tariffs, implication on oil, implication on FX. You want to stick with companies that are likely to report some sort of FX gain in the event of Naira depreciation. That's exactly what it did. That's just one support. But I think the other impacts of strong revenue growth and proper curtailing of expenses explain the high EPS. And of course, it also cascaded to decent dividend. I think they reported about 2 Naira dividend, right, which is the highest, which more or less implies the highest payout in about 2 years. So I think really decent. Happy shareholders upstairs.
Yes, really happy shareholders. And the chairman was promising better result for 2025. But I just wondering, and he promised big tickets, listings for 2025, like Dangote, refinery and NNPC. But I want to know are we going to see NNPC, looking at how it's going, the trajectory, do you think we'll see NNPC, Dangote refinery, coming on board in 2025 and probably boosting the market capitalization of the NGX?
Yeah, on that, we have to wait to see how things unfold. But what is clear is more listings, more market activities will translate to better numbers for the NGX. I said listing fees grew by about 300% in 2024. So if you see big ticket listings in 2025, that will, of course, again, boost that line item. And I think that line item is very, very important in their books. It's one of the biggest components of their income. So if that happens again, we expect some strong performances.
Thank you so much, Phil Anegbe, Vice President and Head of Research at Cardinal Stone Securities. Thank you for joining us on Business Incorporated here at the NGX. I will hope to see more of you.
Yeah, thank you very much. Yeah.
So let's move now to the Middle East and see how other markets are performing. At intraday, we'll see Dubai down 0.13%, Abu Dhabi doing not badly, 0.71%. Elsewhere within the region, we see negative sentiment still permeating there. Saudi Arabia as a Tadawul index down 0.01%. Qatar index is also down 0.08%. Now let's check in on the U.S. markets and see if any bit of recovery they were trying to get is still sustained, especially after Trump's tariffs took effect today. Now, S&P 500 futures fell early today, Wednesday, as President Donald Trump's tariff took effect, as I mentioned. The S&P 500 was inches away from a bear market under pressure in recent days from worst selling since the outbreak of the pandemic in 2020. Now, futures tied to the S&P 500 index were down 0.65%. Dow Jones Industrial Average futures lost 0.95%. That's nearly 1%. And the NASDAQ 100 futures dropped 0.18%. That's coming from the fact that it was trying to recover, but I think the market sentiments are still very strong, and that ended in the red. They're still in pre-market trading, though. Now, U.S. tariffs of 104% on Chinese imports took effect shortly after midnight. China has vowed to fight back against these levies, and we're seeing those reactions there. Duties on a raft of other countries also took hold. Canada is reaffirming their plans to put into effect 25% retaliatory tariffs on U.S.-made vehicles, and this includes vehicles that aren't compliant to the United States-Mexico-Canada agreement, in addition to non-Canadian and non-Mexican content of USMCA-compliant, fully assembled vehicles brought into Canada from the U.S. Let's see how the markets fared on Tuesday in the heat of this, and we have Maria Bird, our correspondent there in the U.S., giving us the highlights for yesterday.
The U.S. stock market tumbled on Tuesday as investors were anticipating the increase on tariffs for many of the U.S.'s major trading partners, specifically China. Import taxes could be up to 104% as of midnight on Wednesday. It is clear that many investors are wondering how this will have an impact on the U.S. economy. Specifically, the Dow Jones saw a dip of up to 0.8% on Tuesday, and the S&P 500 had its worst day in a year, closing at 1.6% down. And the heavy-tech Nasdaq led the day at 2.1% down. And the investors are watching to see how these import taxes could have an impact on the U.S. economy in the long term, and how the tariffs could have impacts over the next few days and weeks ahead.
Yeah, that's Maria Bird there in the U.S., giving us the highlights for yesterday's markets. And we did see that green close, so green numbers coming in yesterday. But yeah, today we see it falling down again in pre-market trading because of Donald Trump's tariffs coming into effect and affecting a lot of countries and imports from those countries. Now, Asia markets, let's look at Asia markets and see how they performed. They fell on Wednesday. They closed Wednesday in the red as U.S. President Donald Trump's country-specific tariffs came into effect. Now, Japan's Nikkei 225 lost 3.93% to end the trading day at 31,714 points, losing at 32,000 level there, while the topics traded 3.4% lower to end at 2,349. South Korea's Kospi edged 1.74% lower to 2,293 points. Now, the benchmark has lost over 20% from its July high, confirming a bear market now for that index. Now, Hong Kong's Hang Seng Index climbed 0.68%. That's in China. That's trading in opposite direction now to close at 20,264.49 points, while the Hang Seng Tech Index added 2.64%. China's Shanghai Index rose 1.31% to close. Now, with the additional Trump tariffs having come into effect, Chinese goods will now face a cumulative 104% tariff rate, and India's let's look at India's market, how they closed today. We're seeing India's Nifty 50 down, unfortunately, 0.61%. That's how the market is trading right now, especially in Asia. We're seeing that knee-jerk reaction from all that is going on in the TT world right now, Trump tariff world. And we're hoping that, the analysts have spoken, that Nigeria takes advantage of this, strengthening ties, relationships, and probably seeing other trade avenues that we can, export our market. So we're not, like analysts say, that we're a bit insulated because we don't have a lot of foreign investors in the country. But if we do have this exposure, we'll be facing much more reaction that we are getting now on the NGX. But if we have these plans in place, Edie, I'm hoping that we will see maybe a boost in our economy, don't you think?
All right, Will, thanks for taking us through that market journey around the world. and bringing us back here. Well, I hope you bring a lot of things back from the NGX, where you've been since morning. I know they are having their AGM today, and that's one of the things we expect from you. All right, now let's take a break. When we come back, of course, perhaps we'll talk a little some things outside the tariff with our colleagues in Berlin. Solar energy production has grown again in Germany. We'll get the details. And of course, what's going on in Cape Town. We know it's Arda week is still on. I think this is day 3. Today is day 3. So we'll get details of that from our correspondent, Innocent Semosa. But that's all after the break, so do stay with us. Welcome back. Still watching Business Incorporated here on Channels Television. Let's see what's happening in Africa. We begin from Zimbabwe, where gold and foreign currency reserves has risen more than twofold since introduction a year ago. Central Bank governor revealed this, and the reserve stood at $629 million at the end of March, compared to what it was, which is $276 million at the end of April 2024. They say they are sufficient to cover the entire ZIC deposit in the banking sector. The Southern African nation holds 2.771 kilograms of gold in reserves, and that's valued at about $274 million. The Zimbabwe gold started trading April 8, 2024, replacing the defunct Zimbabwean dollar, which was in free fall. Authorities now want it to supersede the dollar, which has been used as a dual transacting currency since 2009 and is currently used in 70% of commerce. The ZiG has depreciated 4% against the dollar this year and lost nearly half of its value against the greenback since it was launched. Still in Zimbabwe, airports recorded a 19% surge in passenger traffic flows last year, and that's driven by government's upgrading and refurbishment of the ports of entry. Data from the Civil Aviation Authority of Zimbabwe shows that air passenger volumes rose to over 2 million last year from around 1.9 million in 2023. The data, which is showing a promising outlook for the Zimbabwean aviation sector, shows an over 5% growth in air traffic movement compared to 2023. As a result of increased trade, the country's airports also experienced growth in terms of cargo volumes to over 17 tons compared to around 15 in 2023, with more volumes being recorded in the last quarter. The international and domestic airports in Zimbabwe have witnessed huge milestones driven by influx of new airlines, new routes, and increased flights. The Central Bank of Kenya has reduced the base lending rate by 0.5% following a monetary policy committee meeting. In a statement, CBK Governor Kamau Thunge, who also serves as the MPC chairman, announced that the move would stimulate bank lending and support economic growth. Thunge revealed that interest rates had been lowered by central banks in major economies and on inflation and gross domestic product projections. And so following this, the governor notes that since December 2024, average loan rates had been gradually falling, but the growth in private sector credit remained muted. However, the ratio of gross non-performing loans to gross loans increased to 17.2% in February 2025 from 16.4% in December 2024. And Egypt and France have signed a €7 billion, that's about $7.68 billion agreement, and it's to develop, finance, and operate a green hydrogen production facility. Egypt's transportation minister has revealed this. The agreement was signed during French President Emmanuel Macron's visit to Egypt. And France and Egypt signed strategic partnership agreements in areas covering health, transport, and energy, and which Macron says would help shore up Egypt's stability amid volatility in the region. We're still in Egypt, where the trade balance recorded a deficit of $3.42 billion in January 2025, and that's slightly lower than $3.44 billion that was recorded in the same month of 2024. It marks a 0.58% decrease. This is according to the Central Agency for Public Mobilization and Statistics, CAPMAS. Exports rose 20.1% to $4.36 billion in January 2025, compared to $3.63 billion in January 2024. The increase was supported by higher export values of key goods, including ready-made garments, which rose by 15%, pasta and various food preparations by 31%, iron bars, rods, and wires by 24.7%, dry pulses by 15.6%. Imports increased by 10.1% to $7.78 billion in January 2025, and that's up from $7.07 billion a year earlier. This was driven by a surge in imports of natural gas, which jumped by 145.5%, wheat jumped 22.5%, organic and inorganic chemicals that went up 13.3%, and primary forms of plastic went up by 3.1%. Now let's take you to Cape Town, South Africa, where President of the African Refiners and Distributors Association, Mr. Mustafa Abdul Hamid, has described former U.S. President of the United States, Donald Trump's tariff hikes, as a wake-up call for Africa. And he says it's time for the continent to turn inward and build a stronger industrial and economic foundation.
The event brings together key professionals, stakeholders, and experts from across the energy industry to exchange ideas, explore innovations, and strengthen partnerships. Now, with Trump's tariffs continues to rage uncertainty across different sectors in the continent, the president of the African Refiners and Distributors Association, or ADA, Mustafa Abdul Hamid, says the time has come for the continent to look inward and build a stronger industrial and economic base.
So if even an advanced country like America is thinking of protecting its local industry and ramping up local production, it should only teach us a lesson that we should also look inwards and try to either we can reciprocate.
South Africa's CEO of Mining Federation also shares the same sentiment, urging African nations to reduce reliance on foreign markets.
What Mr. Trump has done for us is a gift, which we were not even aware of. What it has forced us to do, it has forced us to look amongst ourselves, to look internally within the continent. I mean, we've got agreements like the AFTA. We do not need Americans to be consumers of our products when we've got more than 1 billion people in the continent.
Lydia Naira from Gabon is calling for increased participation of women in the energy and mining sector, saying inclusivity is key to sustainable growth.
I mean, compared to upstream association, I believe in the downstream association, there are more women and active women. We've seen great participation in the different working group over the weekend, and also in the different panel.
Meanwhile, some delegates see technology as a crucial enabler, one that can transform trade and boost competitiveness across the continent.
It's very important. Traditionally, it was very difficult to locate where your vessel would be, and you would have to rely on ship captains and those on board the vessel to give you updates. Now with our technology, we're using AIS. These are satellites which are based either on the vessels themselves or in the sky, and we're able to track the vessels and determine where they are, where they're located.
So what we're trying to do, we're trying to provide clarity for organizations, companies, traders, ship owners, and as such, and anyone who is in the value chain, to have better transparency on where their product is, where their product is going, and what's at sea, and actually mitigate some risks that there may be by us being able to highlight where the risks are and to help them make better decisions.
As Other Week 2025 continues here in Cape Town, delegates here are hopeful that collaboration and innovation will drive Africa's energy future forward. From Cape Town, South Africa, Innocent Samosa, Channels Television News.
Thank you, Innocent. I'm talking about energy. Solar energy production has grown in the past year. That's according to a new study by the Global Electricity Review. It looks at energy sources in place around the world. Lars Holter has more details on this. Lars, good afternoon. Welcome to the program. And for once in a long time, I guess we are discussing something other than the tariff.
Yes, Sini, that's right. Isn't it nice to take a break, even though, of course, and I guess we come to that in just a little bit later when we look at the markets, of course, tariffs is still front and center. But I do want to tell you a couple of things here about what I read in the study. I found it very interesting. Solar, again, was the fastest growing power source last year, and it's actually been that for the past 20 years. And just over the past 3 years, according to this study, worldwide solar energy production has actually more than doubled to 2,100 terawatt hours. And this amount of solar energy is actually being harvested around the world. The biggest growth last year was, like with many other sectors, in China. That country actually at this point has about half the world's solar energy production. Now, as we know, China is also a leader in battery technology. Just think of their recent progress in electric mobility and this very drastic switch from combustion engine cars to battery-driven vehicles. Battery powering cars is obviously all the more exciting when you get your electricity from the sun. And with China being the world's largest maker of solar panels as well, and also having some leading technology in energy storage, that makes this another booming sector over there. But of course, here as well in Europe and in Germany, solar has once again seen over the past year tremendous growth.
And when we look at this, what does it bring about the trend for the future for solar? What picture does it paint?
Well, Ini, I think there's two things you can pretty much say with certainty. First of all, solar energy will continue to grow, and that's for, I think, two reasons. It is, of course, a sustainable and climate-friendly energy source, but also it's a cheap energy source, and it's somewhat isolated from aggressive price moves that we've seen in other energy sources. Just think gas after Russia started its war in Ukraine. Gas prices shot up. Inflation was through the roof. Anyone who had little exposure to gas actually came out a winner. So there's definitely a huge incentive for many to switch into renewables. And the other reason for further growth in that sector is, I think, battery technology, storage technology is getting better every year. And that will at some point mute a point that many solar critics have brought up over the years. What if the sun doesn't shine? Or looking at the wind energy, it's similar. What if the wind doesn't blow? Indeed, with little storage capacity, this used to be a problem. But as energy storage becomes more refined and more affordable, we will likely see a lot more growth in that sector.
Yeah, we hope to say it's more affordable back here in Nigeria too, because I tell you, solar, the initial cost in Nigeria is a discouraging factor. But I mean, as more technology come in, we do hope that we would see it at better prices. So you were mentioning tariff at the beginning of our conversation, how that's still a driving factor at the markets.
Yes, I mean, really, if you look at markets, of course, for days, it's been really only one topic, and we see the same picture today. And since that trade war, especially now, right now, between the U.S. and China is worsening with, of course, Trump initially putting higher tariffs on China, China hitting back, then Trump ratcheting it up to 104%. That shocked markets. Now it seems China is also increasing their tariffs. This is an extremely fast tit for tat that we are seeing here, and this is putting a lot of pressure on the markets here. We're seeing the DAX in Frankfurt down over 4%. Obviously, we saw similar moves earlier in Asia. What I found a little interesting, among all the losing stocks, automakers are a little bit less in trouble than they usually are. But obviously, we have to take that as a fact after we've seen these dramatic losses over the last couple of days. I guess there is that turmoil in the market that is keeping us busy. We'll keep an eye on things for sure. Today, we're actually also getting more and more details about what the EU is planning in reciprocal measures, and whatever we hear tends to give markets another push or pull here as well.
Yeah, and last, and there was, because of the recovery, a bit of recovery we had yesterday, I thought the worst was over and that we're on our way to recovery, but it seems my expectation, was totally wrong. But anyways.
We're on the roller coaster, Ini.
Yes, we are. Yes, we are. We just follow through. All right, Lars, thank you so much and hope to talk to you tomorrow.
Thank you. See you then.
Yeah, so I thought the markets recovered yesterday, especially from the Asian side to Nigeria, even in Europe. So there was that hope that perhaps the worst is over and we're on our way to recovery, but doesn't look that way, especially with the 104% tariff from the U.S. to China, and China has reciprocated again, about 40% or so. That's what they're hinting at, additional tariff. I mean, it's a war and everybody is feeling it, including the crypto market. Yesterday, we managed to see a bit of green, thinking that it would stay that way. But no, the color has changed again. So yesterday, we saw Bitcoin got up to about 79,000. But we can see that that's past tense now. So in the last about 24 hours, it's down 4.54%. That's for Bitcoin. Ethereum is also down under 1,005. That seems to be where it's staying at this time. XRP, and it's just shades of red in the market, not different from the stock market. I wonder if we will get a recovery or if some very confident investors will decide to make some moves and show buying interest in those cheaper stocks or cheaper coins, I wonder. We'll see, but first let's see what's going on other than this bloodbath. Let's see what's going on this afternoon. So we see for the headlines, BTC ETF saw 326.3 million in net outflows. US spot Ethereum also recorded a total net outflows of 3.3 million. That's according to data from Farside Investors. Also led by a net outflow of $1.8 million, followed by Invesco's QETH with a 1.5 million. What does this mean? We also hear that Larry Fink, which a BlackRock CEO, is saying that he's not ruling out another 20% dump in the market, even though he still maintains that there is a buy opportunity somewhere around all of this. Wow. So he's hopeful. I wonder if Solomon Amunde is hopeful also or sees a buy opportunity in all of this red color. Hi, Solomon. Good afternoon.
Good afternoon, Ini. Good afternoon.
So do you see a buy opportunity? Larry Fink is saying that even though he still sees further drop, about 20%, but it's still a buy opportunity. But I think it will take investors with guts to go into the market, yes.
Yeah, definitely. Veteran investors should have started getting into the market by now, gradually, because generally we've seen like insane dumps in the market that we haven't seen in over 5 to 10 years. So this presents like a huge opportunity that we haven't seen in the last decade in the market, both in the crypto markets and also in the forex and stocks markets. There's like huge opportunity right now. In fact, some would argue that there is more opportunity in the FX and stocks markets than there is in the crypto market, but that's a conversation for another day. But yeah, if it's a good opportunity to buy, if it's good enough prices right now for investors to begin gradually buying, I'll say 100%. It's about time they start getting back into the market.
Yeah, but I mean, some will ask, when will we see Bitcoin back to that 100,000 level? We just see red, and it doesn't look like there's any major driver that can reverse the trend that we have at this time.
Yeah, we can't say for certain when exactly, but there's something we can say for certain, which is the price of the market, the price of assets on the market, Bitcoin including, is actually being suppressed right now. Price is just reacting to lots of the trade wars we're seeing and the tariff wars that we're seeing. So whatever price we're seeing right now in the market is not real. It's actually being suppressed. So whenever the whole tariff war comes to an end, or there's an understanding, or it's no longer as chaotic as it has been for the past few weeks, whenever we get to that point, we should see like a huge surge in the prices of assets in the market towards the upside.
But what seems to be stopping investors from hedging in the crypto at this time? One would have thought that's where they will head to.
Yeah, what's stopping them is because there are lots of opportunities right now. When they look at the stock market, there are huge opportunities there. I mean, they're seeing lots of solid companies that their stocks have crashed by 30, 40, 50%. So it's now a question of where do they have like the most risk to reward, basically. Where do they feel like it's a better opportunity for them to invest their capital? So even those with huge chunks of capital, they are still uncertain and trying to decide if they should throw it into the crypto market or if they should throw it into the stocks market. That's where the issue is coming from, basically.
Mm. So I wonder, Solomon, do you see this as another, a lot of times we read about historic crash of the stock market and historic this, and do you see this period as another historic moment that perhaps, years after we will be referring to at this time?
Yeah, definitely. I see it as so, definitely. Years from now, we'll be talking about what's happened in the year 2025. Lots of opportunities that 2025 presented, and probably some companies that didn't make it past 2025 that maybe got affected by all of what's happening right now. But definitely, new millionaires will be made from the numerous opportunities in the market right now. So I believe years from now, we would make reference to what happened in the year 2025 relating to investments and opportunities and the financial market.
Yeah, I like the way you keep referring to it as opportunities. But what do you see
Yeah.
as a likely boost to change the trend from the US, from President Donald Trump? He's very good at moving the market. Or do you see just a calm and the acceptance of a new normal after all the turbulence around who's reciprocating tariff and the other?
Yeah, I think what would give a boost is once the top parties involved, they are able to like fix a meeting, come to an agreement, and maybe give like a time frame where they won't try to like tweak the tariff again. Once we get a news like that, that will be like a huge boost where you can see both the stocks and the crypto market pump by over 40, 50% immediately the news drops. So I think that would give like some good relief in the markets basically.
Yeah, but unfortunately, we don't see that now because um, US has given 104% on China. China is also reciprocating, and we don't know what President Trump or how he would feel about being challenged that way. So it seems the worst is not here yet. Perhaps we're still looking for the bottom.
Yeah. We can't tell the bottom yet. Right now, what we know for certain is the market will be highly volatile. But this won't last forever. This will take maybe a few weeks or thereabout. Eventually, both parties will come to an agreement. It's very normal for us to experience huge volatility right now. For those that don't have that risk appetite for a volatile market, the best option is for them to stay clear of the market at times like this. But whatever is happening right now, I don't think it will last for so long. I don't even see it going past the second quarter.
Okay, we'll stay optimistic with you. Solomon Amunde, thank you so much for your views on the program.
Thank you very much, Ini.
Well, so that's it. Which way do you want to look? Is it a abundance of opportunities at this time, or is it a crash, on a bloody market? It depends on your perspective to help you make your choice. Well, that's it on Business Incorporated today. Thank you so much for being a part of it. Remember that you can watch Business Morning, you can watch Business Incorporated at any time on our YouTube channel to relive the experience and you think you missed any information. But better still, we'll see you tomorrow. Fresh episodes will be coming your way from 10 a.m. I'm Mini John Mekwa. Enjoy the rest of your day.